Welcome to Fire's educational video series. The objective of this video is to talk about the various ways in which a trend can change its direction. In the previous video, we talked about what a trend is, the three different types of trend, and the 3 degrees of a trend. If you haven't watched that video, I highly recommend you do so before watching this video, as this is a continuation to the prior video. This video assumes that you have a good understanding about what a trend is and what are its different types. Having said that, before we proceed any further, keep in mind that a change in trend does not necessarily imply a reversal in trend. There is a subtle distinction between the two. Let us explain this using the example of an uptrend. When someone says that there is a change in the prevailing uptrend, it means the uptrend has changed into either a sideways trend or a downtrend. However, when someone says that there is a reversal in the prevailing uptrend, it means the uptrend has changed into a downtrend. Notice the difference? Change in uptrend means an uptrend turning into a sideways trend or a downtrend. However, reversal of uptrend means an uptrend turning into a downtrend. Long story cut short, a change in trend does not necessarily imply a reversal in trend. It is very important to understand this subtle difference between the two. Now, let us talk about the various ways in which a trend can unfold over time. This is a scenario which depicts a reversal from uptrend to downtrend. Notice the 3 successive higher highs and the 4 successive higher lows, indicating an uptrend in action. Recollect what we said in the last video. As long as the sequence of higher highs and higher lows prevails, the uptrend is intact. However, notice the area marked underneath the red arrow. Here, price has made a lower high, thereby breaking the sequence of successive higher highs. While this by no means depicts a reversal in trend, failure to surpass the previous high indicates that the bulls might be getting tired. In such a case, one needs to keep a close watch of the previous low. If that low breaks, it indicates a trend reversal. This is in fact what can be seen in the chart. After making the first lower high, observe that the price went on to break the previous low, thereby ending the sequence of successive higher highs and higher lows. What we now have is the first sequence of lower high and lower low. In other words, we now have a downtrend in action. This downtrend would be intact so long as the price continues making a sequence of lower highs and lower lows. In this daily time frame chart, notice the uptrend in action with the sequence of higher highs marked using the red arrows and the sequence of higher lows marked using the green arrows. During this uptrend, notice that the price made a lower high, indicating that the bulls might be getting exhausted. However, see that the succeeding low did not break below the previous low. Later, see that the price went on to surpass the previous 2 highs, thereby reiterating the sequence of higher highs and higher lows. Meanwhile, towards the fag end of the chart, notice that the price failed to surpass the previous high. Later, observe that the subsequent decline from this lower high took the price below its previous low, thereby ending this uptrend. As the price has made the first sequence of lower high and lower low, what we now have is a downtrend in action. This downtrend remains intact as long as the price continues making a sequence of lower highs and lower lows. This is a scenario that depicts a continuation of uptrend following a period of consolidation. First, notice the 3 successive higher highs and the 4 successive higher lows, which is indicative of an uptrend in action. Following this, see that the price entered a period of consolidation, during which time it neither trended higher nor trended lower. This indicates a shift in stance from a buyer's dominated market to a market that is in a state of equilibrium. Which side of the consolidation will the price break is something that is difficult to say at hindsight. Hence, it is very important to remain patient during such times and wait for the price to decisively break in one of the two directions. In this case, see that the break came on the upside. Observe that the price broke above the two consolidation peaks as well as above the high preceding these peaks, indicating that buyers have regained control of prices and that the uptrend has resumed. In other words, following the rally, see that the price took a breather before resuming the up move. This is the hourly time frame chart. Notice that the first third of the chart is characterized by price in an uptrend. In the second third of the chart, see that this uptrend then switched into a period of sideways movement. Finally, notice that this sideways movement ended when the price broke above the high of the consolidation marked using the upper black horizontal line. Following this, the prior uptrend resumed. What we have here is an uptrend, then a pause, and then a continuation of the uptrend. It indicates a scenario wherein the bulls have regained control of prices following a brief pause. This is a scenario that depicts a reversal of uptrend following a period of consolidation. Notice the 3 successive higher highs and the 4 successive higher lows indicative of an uptrend in action. Observe that the price then exited this uptrend and started consolidating. What has happened here is that the buyers have lost some control of prices and now there is a state of equilibrium. As said earlier, one should not preempt which side of this consolidation could the price break. Instead, one needs to remain patient during such times and wait for the price to decisively break out in one of the two directions. In this case, see that the break came on the downside, indicating sellers have taken control of prices. Observe that the price broke below the two consolidation troughs as well as below the low that preceded these troughs. What this chart tells us is that over time, the balance of power has gradually shifted from buyers to sellers. This downtrend shall now remain in place as long as the price keeps making a sequence of lower highs and lower lows. This is the daily time frame chart. Notice that during the first third of the chart, the price is in a nice, clear uptrend as indicated by the sequence of higher highs and higher lows. However, following this rally, see that the price then entered a period of consolidation, during which time it struggled to make higher highs. Finally, notice that this sideways movement ended when the price broke below the low of this consolidation marked using the black horizontal dotted line. The break below this consolidation signaled at a gradual shift in power from bulls to bears. This is a scenario which depicts a reversal from downtrend to uptrend. Notice the 3 successive lower lows and the 4 successive lower highs indicating a downtrend that is in action. However, notice the region above the green arrow. Here, price broke the sequence of lower lows and instead made a higher low. What this tells us is that the seller's grip on price might be weakening. In such a case, it becomes important to keep a track of the previous high. If that high is broken, it indicates a trend reversal from down to up. In fact, see that this is what happened. After making the first higher low, price went on to surpass the previous high marked using the dotted black horizontal line. This in turn ended the sequence of successive lower lows and lower highs. What we now have is an uptrend in action. This uptrend will remain intact so long as the price keeps making a sequence of higher lows and higher highs. This is the 4-hourly time frame chart. For most of the chart, the price was in a steady downtrend, as can be seen using the green and red arrows that are marked for each important low and high respectively. The first warning sign that the downtrend could be losing momentum appeared when the price broke the sequence of lower lows and made a first higher low. Confirmation that this downtrend has ended and that we are now in an uptrend emerged when the price surpassed its previous peak, thereby forming a sequence of higher high as well. This first sequence of higher low and higher high signaled at a greater probability of trend reversal from down to up. Notice how the balance of power shifted swiftly from bears to bulls. This is a scenario that depicts a continuation of downtrend following a period of consolidation. First, notice the 3 successive lower lows and the 4 successive lower highs, which is indicative of a downtrend in action. Following this, see that the price entered a period of consolidation. This consolidation indicates a shift in stance from a sellers-driven market to a market that is in equilibrium. Later, see that the price broke on the downside, signaling continuation of the prior downtrend and sellers regaining control of prices. This is the hourly time frame chart. Notice that after the decline, the price entered a lengthy period of consolidation. This sideways action eventually ended after the price broke below the consolidation lows, causing the downtrend to resume. This is a scenario that depicts a reversal from downtrend to uptrend that is separated by a period of consolidation. Notice the 3 successive lower lows and the 4 successive lower highs indicating a downtrend that is in action. Observe that the price then exited this downtrend and started consolidating, indicating a market shifting from one that is dominated by sellers to one that is in a state of equilibrium. Observe that this sideways action ended when the price broke above the consolidation highs, signaling that buyers have now taken control of prices from the sellers. This is the 10-minute time frame chart. Notice that during the first half of the chart, the price is in a nice downtrend as indicated by the sequence of lower lows and lower highs. However, following this downtrend, see that the price entered a period of consolidation during which time neither the bulls nor the bears were able to gain an upper hand over the other. Eventually, observe that this sideways movement ended when the price broke above the high of this consolidation and started to trend higher. The break above this consolidation signaled at a gradual shift in power from sellers to buyers. So, These are some of the most common ways in which a trend changes direction. In some cases, we see a reversal of trend, while in others, we see continuation of the prior trend. Until the next video, it would be a good idea to put theory to practice. We suggest viewers to open a few charts of their choice and closely monitor the historical price trends across various time frames. Before we sign off, keep in mind that markets are imperfect. In the real world, when you're looking at charts and identifying trends, do not just try to look out for a perfect trend, one that perfectly adheres to the characteristics discussed in this video. Instead, it is critical that you be very flexible in your approach. If not, you could miss out on several potential trade setups. Keep in mind that trends do not unfold as smoothly as you would expect them to. There will be instances wherein a lot of subjectivity will come into play. The more you get used to looking at charts, the more you will understand about this and the more accustomed would you become in identifying trends and changes in them. Well, that was all that we wanted to talk about in this video. If you liked our video, do not forget to click on the like button below. Also, hit the subscribe button to subscribe to our YouTube channel and the bell icon to receive regular updates from our side. Last but not the least, we have a dedicated space for School of Stocks related discussions on FIRE's community. We encourage you to interact with us on our School of Stocks community page by visiting the link shared below. Thank you for watching this video.